The benchmark US stock indexes opened this week in a confidence and closed with a moderate decline yesterday. The Nasdaq is the only index which closed with a modest growth. The S&P 500 and the Dow Jones lost ground. Today, Wall Street will hardly find clarity, but the crypto market is set to trade with a high volatility. The stock market incurred some losses on Tuesday. The S&P 500 shed 7 points, or 0.15%, to close at 4,756 points. The major stock indexes traded mixed in the New York pre-market. Futures on the stock indexes remained in the green zone, trading 0.1 and 0.03% up. The baseline intraday corridor for the S&P 500 is defined between 4,735 and 4,776 points. Going beyond these borders will push the index down to 4,710 and 4,680 points, or up to 4,782 and higher. There is no clear-cut trajectory on Wall Street today. The index are sensitive to the news on the corporate sector and comments by Fed policymakers. In fact, the benchmark stock indexes are trading sideways. Any sharp moves will happen at the end of the week. The economic calendar was empty yesterday. Small businesses in the United States are recovering confidence. Only 4% of the companies expect a fall in sales in the coming 3 months. Besides, the trade deficit in the United States shrank by 2% in November to $63.2 billion. In his speech yesterday, Vice Chair for Supervision of the Fed Board of Governors, Michael Barr, did not speak about further policy moves and focused on regulation of the banking sector. The issue came to the fore in March last year. Earlier this week, Atlanta Fed President Raphael Bostic advocated for keeping hawkish monetary policy. Federal Reserve Governor Michelle Bowman softened her hawkish stance and signaled the scenario of rate cuts on the back of waning inflationary pressure. Most of the 11 major S&P sectors lost in value, with the energy sector being the weakest, down 1.63%. Boeing shares lost for their second straight session, closing 1.4% lower. Pre-market trading today did not promise the US stock market any visible dynamics. Index futures fluctuated in different directions. Stocks are hovering around early year levels as investors reassess their expectations for the pace of monetary easing and await consumer and factory inflation data due on Thursday and Friday, respectively. A large number of government and corporate bonds are also expected to be issued this week. The first of this week's major Treasury auctions appeared to go smoothly on a late Tuesday, with a $52 billion in a 3-year bond sold easily and about $37 billion in a 10-year notes set to sell later Wednesday. 10-year Treasury yields fell below 4% ahead of the auction. Declining yields have helped the high-tech giants gain some ground. Shares of Amazon, Meta and Microsoft rose between 0.4 and 0.8% before the opening bell. Shares of chipmakers NVIDIA, Advanced Micro Devices and Intel also grew by 0.5 to 1.1% on a fellow chipmaker TSMC's quarterly earnings forecast. The speech of a New York Fed President John Williams may also influence market sentiment today. Meanwhile, the US dollar index was wound down by falling Treasury yields, but the losses were modest. The index slipped by 0.06% in the pre-market to open the New York session at 102.50 points. The US dollar index is expected to trade in the intraday corridor between 102.30 and 102.70. In case the instrument goes beyond these borders, the seller's target will be 101.80 and the buyer's target is seen at 103 points. The index has grown by 1% this month, following a 2% fall in December, as the traders are reassessing the prospects of the Fed's monetary easing and the timeline for the rate cuts. Now, market participants are alert to the report of a major importance, the US inflation data due on a Thursday. The CPI is expected to grow by 0.2% in December from a month ago. The annual rate could have eased to 3.2% last month, while the market is in a suspense. Fed fund futures indicate a 64% chance of the Fed easing policy in March, way below 80% the week before. In the meantime, the Canadian dollar has strengthened a bit today. The USD pair traded at 1.3385 in the pre-market. The instrument is likely to continue trading within the same borders of a 1.3335 to 1.3420. The loonie regained its footing amid intraday growth over oil prices. Crude oil is trading with a high volatility because the oil market is trying to strike a balance between the likelihood of a low demand and supply fears. As for the economic calendar, data on Tuesday showed that Canada's trade balance missed expectations and came in at 1.57 billion Canadian dollars, well below the deficit in the previous months. The figures limited support for the Canadian dollar, whereas the currency and stock markets today are more like a sleepy kingdom. The cryptocurrency market is trading on a bear nerve. A cyber attack on the Securities and Exchange Commission's account and report on an ETF approval propelled Bitcoin to a 21-month high of $47,897. Then the token took a nosedive. Bitcoin opened the New York session in a depressed mood at the level of $45,029. Cryptocurrency stocks, including Coinbase, Bitfarms, and Riot platforms, dropped between 2.2% and 3%, while other platforms began their countdown as the Securities and Exchange Commission's decision is due today. The intraday outlook for Bitcoin suggests the movement within the range of $44,800 to $46,000. Going beyond these borders can lead the crypto down either to $44,300, $43,100, $42,000, or up to $47,100, $48,200, and $52,000 on the condition of the most optimistic end to the saga with the Commission. You have watched a review of the New York session. Feel free to share your opinion and ask any questions. Make sure you subscribe to InstaForex TV channel. Our analysts keep you updated on all trends and market developments. So see you online tomorrow.